Most people think that building a new home or doing that remodel they've been putting off will drain their savings. Well, think again. I'm about to show you how to do it with little to no money out of pocket. Show you exactly what you need to know and what options are available. First, let's talk about construction loans. Now, when you want to build a home, there's definitely a lot more to it. You have to finance the land, you have the labor, you got the materials, permits, and the overall construction project to manage. So let's break it down into these three main steps. 1, buying the land. 2, financing the construction. And then 3, the long-term financing for it all. So typically there are options to put all three of these steps together separately, but this could be super costly. There's short-term loans involved with higher rates, more money out of pocket. Typically when you go to buy the land up front, you have to put at least 40% down for the land loan options. Then you go to finance the construction separately, that's even more money down, more closing costs. Then last, when you go to get the permanent financing to pay off those loans, you have to hope after all that time's passed you still qualify, and then again you got more closing costs involved. This could be a way more expensive and drawn out process when you do it this way. Thankfully there's a better way. There are options that could do all this in one loan and allow for low or no down payment even. Doing this as one loan combines the land purchase, the construction cost, and the permanent loan, saving you on the interest, the closing costs, the time, paperwork, and just a lot of headache. There's also no payments due during the construction process. You don't have to requalify once the construction's completed, and lots of different financing options. What the down payment requirements are, and what type of credit score you're gonna need. So the first one we'll cover is a VA loan. It's called the VA one-time construction loan. If you're an eligible veteran, you could actually do this with 0 down payment, and you typically are gonna need at least a 620 to 640 credit score. There's also a USDA loan that's for designated rural housing areas. You could actually go to USDA.gov and check what areas are eligible. But this program allows 0 down and requires at least a 640 credit score. There's also conventional loan options, also called the one-time close. This is going to require about 5% down and at least a 700 FICO score. And then last, the FHA one-time close product only requires 3.5% down and typically a minimum 620 credit score. Now, these down payment requirements are based on the whole picture. So if it costs you $100,000 for the land and $200,000 for the construction, that's $300,000 in total. The down payment is based on that total. And the great thing about all these programs is they're based on what the home is going to be worth after all the work is done. That's called the ARV, the after renovation value. There are a few important things to know about these programs. You cannot perform any of the work yourself, even if you're a licensed contractor. And the general contractor that you use typically has to get approved by the lender. All the lenders that offer these programs are going to have an approval process that the general contractor has to go through. And also most lenders are going to want it to be a non-arm's length transaction, meaning you can't be related to the contractor or builder either. So definitely keep that in mind. Now, if you want to go about doing this, the first step is to find a lender that's experienced with these types of programs. And you're going to want to work with them to get pre-approved so that you know what your max price point is going to be. And once you are pre-approved, you're going to know your maximum price point. So let's say you're pre-approved for a price of $500,000. At that point, you're going to want to connect with a realtor and a builder or contractor so you can start getting a rough estimate of what you want to build and how much it's going to cost. When you're talking to that contractor or builder, you could explain to them whether you want a 2,000 square foot home, what types of finishes you're going to want to do, and they could start to put together a rough estimate of what it might cost you per square foot to build that. So again, let's say you qualify for that $500,000, and after talking to a builder or contractor, it sounds like the home you want to build is going to cost you roughly $300,000. Well, then you know you need to start looking for land that's going to cost you $200,000 or less, so that total cost or price of the land purchase plus the construction is going to be less than that $500,000 pre-approval you got. So it's pretty simple math when it comes to finding out how much you qualify for, finding out about how much it's going to cost you to, and then the difference of what's left is about the budget you have for land. Now, you're still going to have to make sure that the value of that home, once it's all done, is going to be worth at least what it's going to cost you or more. And the realtor could absolutely help you figure that out. And you're definitely going to want to figure this out before you start writing offers on a piece of land and start spending any money on inspections, reports, or design. Now, you're typically going to have to pay out of pocket for the inspections, the plans, and permits all up front. So definitely talk to your contractor about how much all that's going to cost you so you have a good idea of what your actual out-of-pocket upfront costs are going to be through this whole process. You might be able to negotiate having the seller pay some or all of those costs, so that's definitely worth looking into when you're checking out properties. So yeah, there's a lot more to it, but that's the basic breakdown of how this all works. Now let's jump into some home renovation loan options. Now with renovation loans, it's a little bit easier, more simplified of a process, where some things are still pretty much the same and other parts are more lenient. And these programs are all still based on the ARV, the after repair value. So what the home will be worth after the work's done. So if doing all this work is going to add $100,000 or $200,000 to their value, the bank will give you credit for that when you're qualifying for this stuff. So one program is called the conventional home style renovation loan. These typically require at least a 700 or better credit score and will let you finance up to 95% of what the home will be worth after the work is done. So if you already own a home and have some equity and the work you're going to do is going to at least add the value of what it costs. So if it's going to cost you $100,000 in renovations, it's going to add at least $100,000 in value, then you should be able to do all this without any money out of pocket. Now, FHA loans have what's called a 203 401k loan. These loans require at least a 580 FICO score and will let you go up to 96.5% of what the home's going to be worth after all the work's done. VA loans also require at least a 580 FICO score, and they'll let you go up to 100% of what the home's going to be worth after all the work is done. And last, USDA loans require at least a 580 FICO score and also will let you go up to 100% of the after repair value. The beauty with these renovation loans is you could actually use them when you purchase a home. So if you find an ugly beat up home in a really nice neighborhood and it's at a good enough deal, you could purchase it with one of these renovation products to do all the work and make that your dream home. So drop your questions in the comments and make sure to hit that like and subscribe button if you want more mortgage, real estate, and investing content.